With the Bank of Japan's announcement of more easing, what does that mean for gold? We know that responds typically to central bank easing. Also, we've seen some central banks moving gold, wanting it back. Jim Rickards, author of Currency Wars, is going to tell us what to expect. So first, let's look at the central banks. Okay, so we got this announcement from the Bundesbank that they want to bring back some of their gold from the New York Fed, all of their gold from the Bank of France. Is this a big deal?
It's a very big deal. Now, it hasn't had much short-term impact on the price of gold, granted, but this is actually world historical in my view. That German gold has been in New York since the early 1950s. The end of World War II, Germany had no gold. I mean, their gold was just confiscated. They gradually began to earn gold by their trade surpluses, and in those days, 50s, 60s, and 70s, you could cash in your dollars and get gold, but they left it in New York for very good reasons. It was during the Cold War. There were Soviet tanks outside of Berlin. You certainly didn't want to take your gold back to Germany. But now, 30 years, 25 years after the Cold War is over, they're saying, we want our gold back. They waited a very long time. They're bringing it back in stages. But yes, here's the thing. Gold's either money or it's not. If gold is not money, you might as well leave it in New York because the storage is a pain in the neck. If it is money, you would certainly want it back in Frankfurt. And that's what the Germans are saying.
So you think the big takeaway is that this is a sign that Germany thinks gold is money?
Correct. Yeah.
Okay. So then what does it mean for the price of gold? Because we haven't really seen much of a reaction in the gold market. And is there going to be one? Because no gold is being bought or sold. It's just being moved. Right.
There are a couple of things here, Lauren. Certainly the gold bugs are, hey, this is the beginning of the end. Germany's taking the gold back. The price is going to scream. But you have to understand, 99.9% of investors don't get gold. Warren Buffett comes out and says it's just a shiny metal with no yield. Gold hasn't been taught academically for 40 years. When we have two generations of scholars, anyone under the age of 50 who knows anything about gold is self-taught because they stopped teaching in the schools. Institutional allocations are about 1.5%. Look at an institutional portfolio. It's 40% stocks, 40% bonds, about 1% gold. So this is sort of an educational function that has to go on here. The gold will get there, but not all at once.
Okay, but are you still bullish on gold in the short term?
Absolutely. It's in the short term, with all the money printing around the world, also you have to pick your currency. Like in dollar terms, gold hasn't gone up that much lately, absolutely true. But in yen terms, with the devaluation of the yen, gold's going up a lot. So this is also, gold's partly a function of the currency wars. You have to look around the world. Who's weakening the currency the most? And that's where gold is going up the most. But it takes turns.
I think that's a really interesting point, the different currencies and looking at them versus gold. What about other central banks? It's not just the Bundesbank. We've seen some other action. We know China is accumulating gold. What is the story with China's gold reserves?
Well, China's gold reserves are going up. We don't know exactly how much they are. Officially, they say it's 1,054 tons. But when they announced that in 2009, their last official announcement was 600 tons in 2004. They spent 5 years acquiring 500 tons secretly. Now, it's been 4 years since then. I'm certain that they've been acquiring it secretly in the meantime. In fact, I know they have. I've been to China and Hong Kong recently and spoken to the people who are buying the gold for the Chinese account. So we don't know exactly how much they have. I estimate over 2,000 tons, but I've heard some estimates say 3,000 tons. And they don't have to move their gold from London. They send it right to Shanghai. Their vaults are in Shanghai.
What does that mean when we don't really know how much gold they have? At what point does that become impactful on the market?
That's a very good question, Lauren. It means get ready for a shock to the system. Again, if the Chinese repeat their pattern, go 4 years forward from 2009, that would be 2013, maybe 2014. I expect sometime late this year or early 2014, the Chinese will announce that, hey, we've got 3,000 tons or maybe more, maybe we've got 4,000 tons. That'll be a shock because suddenly the world will wake up and say, wait a second, why is China buying all this gold? Well, the reason is obvious. Same thing the Germans, same reason the Germans want it back. Gold is the real base money. Gold is the real high-powered money.
Okay, and then what about some of the smaller central banks that we've seen either rumors or some reports having to do with their gold? The Netherlands, Azerbaijan, you were mentioning earlier.
That's exactly right. Well, not that long ago, Venezuela got their gold back from England. Everyone said, oh, Hugo Chavez, he's a nut job, And he actually put it in armored cars and paraded it down the streets.
He did. It was a huge event. It was a massive event there.
But the Germans are not nut jobs. Azerbaijan is shipping their gold from London. There's talk about it in the Netherlands. One of the phenomena that could happen, this could become a run on the gold bank. Most of the gold in the world, by the way, is in just a couple of places. Fort Knox, West Point, New York Fed, Bank of England, and a few other places. If this starts to look like a run on the bank, people could say, well, gee, I better get my gold out first before they're all out. So, watch that, because that could feed on itself.
And we better hope it's all there, Jim Rickards.
Right, exactly.
Thanks so much.